Hi, welcome to the market view for Tuesday, the 2nd of September 2014. I can tell you before we start this morning, it's going to be brief because yesterday the US was closed, and this led to the markets being very quiet indeed, as you can see from the 30-minute chart here from the start of the session, and then the high of the session was just 49 pips. No signals in the 30-minute chart, as there were no signals in the 60-minute either. However, in the daily chart, prices traded up to the 76% retracement that we drew in last week. You can see there the market just hitting this before reversing and then heading back down towards the 166 level there, which I spoke about yesterday. The market would need to drive through with professional buying. And we see there was no volume yesterday, and possibly in line with the US markets being closed. So very quiet there. In the news today, we've got 9:30 construction PMI from the UK, and then ISM manufacturing PMI from the US at 3 p.m. there. So there's not a lot to report, to say the least. One thing I will do, though, is just get the right tools. Let's just get rid of the news, navigation. Let me just narrow this a bit, and then back to markup. Let's just go from the low to the high, and this is where you can expect to find some sort of support should the market move lower. Let me just move this one out of the way here for a second. 165, 61 there, or 165.50 is where there is some sort of support. But again, you can see here we've got this very narrow defined trading range at the moment for the pound. It's certainly in a consolidation phase, that's for sure. So let's leave this. And yesterday, of course, the Dow was closed. It did trade electronically for a while, but nothing to report as far as the Dow market's concerned yesterday. And finally, in the implied volatility, 9.83, which I think is just slightly lower than the day before. This was updated yesterday. For some unknown reason, it's been calculated on the overnight market. And again, you can see that in the chart there. It's down towards that 10% area where we're due for another major correction. Speaking of which, if you've not seen this, then you want to have a look for it. This was an article in the Daily Telegraph yesterday. Absolutely brilliant. The spectre of the 1929 crash looms over FTSE 100 as traders take on record debts. And there's a brilliant chart in it. This video is well worth watching, by the way. Very interesting and compelling as well. A lot of the things that we speak about in the market view are in this video. So I will place the link into the email that I send you as well. But this is the one. This is the chart of buying on margin in the US, and this is published by the NYSE, the New York Stock Exchange. And you can see here, this is the amount that's margined, and this goes back to the tech bubble. And there you can see a massive amount, which created a 50% correction in the market. 2007, massive margins as well. This is the amount of debt that people are taking on in order to get into the stock market. And again, you can see 100% correction to here, 50% correction to this low here. And then the lunacy of the QE money finding its way into the stock market. But just take a look at the amount of money that's being borrowed to fund these gains in the stock market. It is now beyond crazy. And it's just a matter of time before we see this market correct in a significant way. So there are going to be plenty of trading opportunities presented for us. There's no doubts about that. And this, I have to say, is probably, along with the other 5 points in the article, the video of the article at the top of the page, is very compelling indeed. It's not. I've been in cash for a long time, not in the stock market at all. Stood aside for the last 2 or 3 months because of all of these different indicators showing that we are due for a major correction. And unfortunately, the only thing I can't do is give you the date and time, but as it says in the 5 key investment charts, when you have a look at the one on interest rates, and once they start to go up, then of course that's going to have a knock-on effect on the market. And it's only going to take one small domino to start falling that starts off the rest of the domino effect that will see this market correct very quickly. I won't tell you what the other 5 key investment points are. Have a look at the video, because they can be, or they are conveyed more eloquently than I can do in this video, because it has the supporting evidence, and I can't play you the video inside of this for copyright reasons. So do have a look. It's well worth taking note of what points are raised, and they are valid points indeed. Right, that's it for me for this morning. I will see you in tomorrow's market view. Have a great day. As ever, thank you for your support and also for taking the time to watch this. See you in the next one.